Good evening and welcome to tonight's Venture Lab. My name is Andrei Gushin. I am Venture Lab Chair. Our mission is simple, to help entrepreneurs succeed. Venture Lab is sponsored by Microsoft BizSpark and Nobby Martins, and we appreciate that very much. Now I would like to leave the floor to my good friend Steve Johnson, former Venture Lab chair who ran very successfully for many years. And thank you again for coming tonight.
We're all here tonight to have a conversation about and a look behind the scenes of venture capital. Venture capital, those are, two great words, aren't they? I mean, you have the venture and you have the capital, right? And when they come together and it all works, it's truly a beautiful thing. Unfortunately, sometimes, they just can't seem to get together, or other times they get together and unfortunately things just might not work out the way everybody had hoped. But hopefully tonight we can all learn a few things and maybe clear up some misconceptions so that the venture and the capital can get together and have a great and successful relationship. We have Enrique Godreau III, Managing Director at Voyager Capital. We have Greg Gottesman, Managing Director, Madrona Venture Group. And we have Bill Bryant, Venture Partner, Draper, Fisher, Jurvetson. The kickoff question that I have is kind of a broad one to get things going. And basically it comes down to, if you'd each answer, what is it that you guys do anyway? What do you do? How do you each personally look at your job, and when you think about going to work and what you do at work, what kind of things do you think about? And also, finally, at the end of that, what excites you about your job?
It's funny, what do we do? My son, I'm at this age now where I go every other year or so into my son's classroom and for the sort of, what does your father do for work day? And a bunch of other things, and my son, after he heard me describe it, said, "Well, I just still don't understand what it is that you do. You don't actually work at the company. You're not actually making anything. How are you getting paid? What is this job that you have?" And it was hard to answer him. I work for a firm called Madrona Venture Group. We've been around for 15 plus years. We focus here on early stage technology companies, mostly internet, software, and wireless, based here in the Pacific Northwest. And we have about $660 million under management, but currently investing out of a $250 million fund. And what I do personally is I like to invest in companies at the very earliest stages and help to build them hopefully into big successful enterprises. For me, the most fun part of the job is really that very early stage where every decision that you make is important. Every hire that you make is critical, where you can be a part of really helping the entrepreneur hopefully build something that can be quite successful.
The moderator, Steve, Andre started out talking about the mission of the MIT Enterprise Forum is helping entrepreneurs succeed. And that's a pretty good definition of what I think we do as venture capitalists. It's very centered around the entrepreneur, and our job is to support them in whatever way we can, most notably by providing capital resources, but hopefully some expertise and direct assistance and help with team building and other aspects of our role as venture capitalists. But there's another way I want to describe what we do, because I think it will help set in perspective what venture capital is all about. And venture capital, what our job is to sell entrepreneurs money. That's what we do. We are salespeople for this commodity called money, and we try to convince entrepreneurs that they ought to take our money because we want a whole bunch more back. We want multiples on that capital, but we're trying to convince you that there's benefits to doing that, and you could benefit from having the access to the capital, build a big company, and we'll participate along the way. So we're salespeople in a lot of ways, and in the best possible sense of that word. And
we got something good to sell.
yeah, well, and we do. We have money to sell, but that's fundamentally we sell the entrepreneur money, and we work with them in such a way that we get that back, plus hopefully a lot more as in the future. The more entrepreneurs understand what our business model is all about, how we make money, who we're serving, and on the back end of our funds, the better off entrepreneurs are, so they don't go into these situations completely blind.
So this is, I've been doing this since '96, and I used to get the question as well. And I remember early in '96 or '98 when I was describing to folks what on earth I was doing, it was really pretty challenging. And so being an engineer, I had to find a structured way of describing what the heck it is that I did. And so I came up with this analogy, and it's kind of held up over time in terms of what it is that I do and what my product is. And so what I do is feeding into a cycle of what I call the 3 Fs, which is funding, finding, feeding. And so let's hit on the 3 of them. So funding. So the first thing we do is we spend a lot of time with investors and asking them to sponsor us and to invest in us and to rely on us in terms of being able to identify the next big thing and being able to identify people that really have a lot of passion around being able to find the next interesting business idea. And it takes a lot of time to nurture those relationships with investors, that they have faith in you, you understand what their expectations are, and really kind of funding the enterprise. And so very much our work is about funding, finding, feeding. And my product is decisions. That's what I make. I make decisions associated with companies that we fund, entrepreneurs that we fund, providing perspective and board and governance sessions, all in service of helping to realize the full potential of that particular company.
Someone was asking about, is this having this weird capitalization going to hurt me? Can you talk about what other things we should either do or avoid doing between the day we incorporate until the day we knock on your door to make it the process easier?
I'd say that raising angel capital at an excessively high valuation, even if you can, is not a great idea, because we have to then communicate with your angels who took the risk and that, hey, I know you invested here, but the proper valuation is here, and that's a hard discussion to have. I think we talked about earlier about maybe the terms of your deal that you struck with that angel don't allow us to come in without that angel. So I don't want that. I don't want my stake to be diluted from 20% because I overpaid to something de minimis. So anyway,
it's disproportionately high, the number of times that issue really comes to bear. The other one is associated with the nature of the entity, and so we see this quite a bit. And just recognize that you may have started as an LLC, right? But you're not going to be able to stay as an LLC at the point that we're really getting engaged with the business. And so, if that's the case, and you're going to collect, looking for venture capital, might as well kind of do it early, if you will, from a process perspective.
I would say the number one thing for me is over the course of, I think a lot of people think you meet with a VC or even an angel and then you get the check. That's usually not what happens. Usually your goal for that first meeting is to try to get another meeting, and the goal for the second meeting is to try to get a meeting after that, and it's sort of a process. And so I think the key is if you say something in that meeting, that it's still true the next time you meet. Because what we're looking for is credibility, integrity, all those sorts of things, right? So if you say, oh, we're just about to close a deal with this company, and we're just, because it happens all the time, oh, we're meeting with these, then all of a sudden the next meeting, that deal that was supposedly going to happen is sort of nowhere to be found. I think sometimes people think, well, maybe they'll forget. We don't, it's what we do for a living. We're not going to forget if we're having a second meeting. So, just keeping that credibility, that integrity all through the process. You're in marketing mode, but you're not, don't oversell, especially sophisticated people, because we're sort of seeing, is this someone who's credible? Is this someone who has integrity? Is this someone who's going to be, because for all of us, part of our funds are our own money, but most of the money comes from other places. It comes from large institutions. It's other people's money that we're investing. So if I'm going to give you a couple $1 million, I have to believe at the depths of my soul that you are going to do right by that money. And so I'm looking for, during the course of the meeting, that you're sort of following through on what you said, that you're credible, and so that would be the thing that, more than anything, that I sort of would look for through the course of time.
somebody on LinkedIn would send you their idea, I assume that's patented already? Or how do you handle NDAs in that kind of situation?
NDAs, what's that?
Well, because I don't know, do I spend money on the lawyer? Or
VCs don't sign NDAs generally. And the reason is because if we were in the business of signing, and imagine DFJ signing 14,000 NDAs. I mean, you couldn't, I mean, we would sign so that's why you have to believe that the reputation of the person that you're sending it to would protect you in some way. If you sent me an idea, and then the next day, I turn around and fund that exact same idea with other people, you're probably going to go tell a bunch of people, blog about that. Who knows? And the most valuable asset that all of us have is our reputation. That's what we have. And so, as soon as that goes away or gets soiled in some way, then we're really out of business, because we have to have people trust us with their ideas and be willing to share ideas with us that they think are really important. I will say another thing though. Most VCs, and I think most people in the room would agree with this, is that the value of an idea is usually not as great as the execute. Not as great. We would say that everything is about execution, and that the actual idea itself is actually of very little value. And so a lot of times I feel like entrepreneurs and folks, especially starting out, sort of put a huge amount of value on that idea. And when they're talking to VCs and other companies, they're sort of expecting sort of a certain kind of reaction, when what I think all of us are thinking is, okay, can it be executed upon? Is this the right person or team to execute on what may be a very good idea? So I think most sophisticated angels and VCs are much more focused on the execution side than on the idea side. And I think as long as it's a credible venture capitalist or even a credible angel, you can feel okay sharing that without an NDA, because they won't sign it.
I have a company that has products that does not have an on-off switch, right? So I have company building fitness equipment for people with physical limitations. The point I'm trying to make is, all of you guys, I'm assuming, represent the venture capital world of Seattle, if not the West Coast. And from your bios, it's all about wireless, digital, web-based, and it's almost as if the real brick and mortar world doesn't actually exist, or the assumption is there's no real inventions out there, or there's no real opportunities out there. Help me shed that type of pessimistic view of venture capital in Seattle, and tell me that there is opportunity for those products that can change the world without an on-off switch.
So 20 years ago, venture funds would have hired somebody who had background in those areas. No longer are those hires being made because there aren't real startup opportunities in that space. We've all gravitated to identifying opportunities around, bits, not atoms, and because of the margins that have been involved. But maybe 20 years from now, we may revert back. I would say that in Seattle, you might not find an investor who would have interest in your area if it's a kind of a niche area, but I don't know how many venture funds there are. I think I read something like 1,700 or something like that in that range. And I would guess that there's at least one that still does focus on these areas, because I know within Draper Fisher we have a fund that focuses just on advanced materials. That's all they do, advanced materials. Don't do anything else. So, we have another fund that does just life science type stuff. So, there I suspect if you dig far enough, they aren't going to be here in Seattle, but, possibly in San Diego.
I'd like to first of all thank you in the audience for your great questions. Certainly made my job very easy, and a big thanks to Enrique, Greg, and Bill for their presentations tonight.